Rates are cut. Yes, you hear me right. Rates are cut. Have you been waiting for a pullback? Are you waiting for a big announcement, the FOMC report to maybe announce, or Fed Jerome Powell to announce that rates are cut? Well, they are. Let me explain. During the night, midnight, I put out a short video explaining what had just happened. This is extremely bullish and what I've done about it. Midnight last night, on the dot, Robinhood brought down their rates on margin. What does that mean? Let me share with you. And let me share with you what it means to the S&P. And we're going to talk about that very briefly. We're just getting ready for a Walmart earnings. You can see it on the screen below me. Walmart have just beaten on earnings. Very significant. Join me for that. What we see this morning is this. The rate of margin has been cut by Robinhood significantly. Really big. So look at this. What we've got here is my position and my margin. If I click details, we have dropped down from 8% to 6.75 in one hit. That's 1.25% in one go. Also, they've now given you $2,000 interest-free with gold rather than just the $1,000. That's a huge step, a huge bullish step for a brokerage. Remember, they have to make money on these rates, and they've reduced it by 1.25%. What do they know that we don't know? They know exactly what we all know. Rates are coming down, and they are the first to bring them down. If you look here, also, if I go on to view all rates, what you'll now see is there's a tiered system as well. So 6.75 is when we are at 50,000 of margin, and that goes all the way down to 5.7 with 50 million. Now, what does this mean? You say, well, okay, Robinhood have brought their rates down, but that doesn't mean anything for the main rates, the Fed and so on and so forth. Yes, it does. There's one thing that we can rely on. People's emotions. They'll always be greedy, they'll always manipulate, they'll always buy more, they'll always overbuy, and they'll always oversell. Always. People always overreact. Wall Street are not investors, they're traders. And there's never a wrong time to buy the S&P, and I back it up with my own money. So what did I do? If we look here at the buying power, you will see it's increased from 14,000 margin to 19,000 margin. Why? Well, during the night, I bought an all-time high on the S&P to demonstrate this. I literally bought an all-time high on the S&P, and I'll share with you what I did. If I go to the S&P right now and I scroll down to my orders, you will see midnight last night, I used margin and I bought, where is it now? Let me just check it. I'm looking in my Roth IRA. So let me go over to VU on my main account. Here we go. Right, if I scroll down here, you will see during the night, I bought an all-time high of the S&P, and I'll explain why. There it is. There it is during the night, midnight, in fact, 4,876. My limit price was 487.80, and I bought it for 487.68. 10 shares using margin at the reduced rate. Did my calculations, how fast I can pay it off, and the extra 1,000 that I've got there, plus the fact that I've now got a lower rate. I've done my calculations, and it makes sense for me to buy even if it's an all-time high. Also, look at this. If you see the S&P chart, when you look at it, it looks like it's ever increasing its rate of growth. It isn't. Again, it's all about human emotion and how humans will react to this. The curve of the S&P, if you look at it, looks as if it's ever increasingly going up. And everyone knows it's the greatest index in the world. Warren Buffett's favorite asset. He owns VU. He owns the S&P. So what we see is it going up. Ever increasing cadence. Now, what it actually means is it's not increasing its rate of growth. It's about 10 to 13%, whether if you invest in the dividends every year, which is the same. So you'd think, well, why wouldn't it just go along sideways or slightly up? The fact it keeps increasing is a bit of an illusion. It isn't ever increasing. It's going up by 10% to 13% every year on average. But if you've got 10% of 100, that's $10. If you've got 10% of 1,000, that's 100. So the rate gets steeper. It looks like it's growing faster. Remember, the end of the day, as a long-term investor, I am looking to buy the 500 best companies in the world, which is represented with a very well-balanced index with the S&P. The ETF I use is VU because it's cheaper, very slightly than SPY, but it really makes no difference. And at the end of the day, there's never a wrong time to buy. Even buying at an all-time high, we know 100%, we know it's going to be up long-term. Might it dip today? Maybe. Will it dip today? I don't think so, because once the news gets out on this video and other people report that the first rate cuts have been done, even though it's not the Fed, and it's a significant cut as well, that'll be very bullish. People will see that as a sign. They see the ever-increasing curve of the S&P. They're hearing all the bullish information, even though there's still fear, macro conditions, World War III, and all this kind of stuff that we still talk about. But remember, more millionaires and billionaires are created during wartime. There's never a wrong time to buy. So I've increased my margin position and I've made my calculations and I've bought more, taken advantage of those lower rates. I've also taken advantage of the increased allowance that you are now allowed 2,000 before any interest is accrued. So for me, it made perfect sense to get in. I've just noticed that Walmart has made a major beat. We're just about to cover the Walmart earnings. So it's going to be a great day. There might be some profit taking, but I do expect now the S&P to continue its rally. If we do get a 15% by the end of the year, and that's highly likely, and then we get a pullback, say 5%, I'll still be up 10% from where I am today. And if you calculate what I'm paying in interest, it makes sense. It's not about timing the market, it's about time in the market. The sooner you are in the index and you hold your positions, long term, you'll start accruing those dividends, keep reinvesting them manually, remember, not automatically. Make sure that you buy at the best time. But at the end of the day, it makes no difference. If you hold long term, it hardly make a difference where you bought the S&P along the journey, because whatever high it sets today, it will set another one in a year from now or 6 months from now. It will just keep doing that over and over again. So your interest will compound, your dividends will compound, and the whole thing will just make sense. You're buying the 500 best companies, and now we know rates are down. Robinhood is the first. Who will be next? Click above my head, down below in the description for more links, and over here and over here. You heard it first. Rates cut here. I've been saying for 2 years they'd come in the summer, and I was right. In fact, they've come early. It's only the spring. Take care of yourselves and each other.